working for money. And we're putting it somewhere and we're hoping that one day we're going to have enough. I'm going to walk you through a system today that is completely different. It's called the ownership economy. And in the ownership economy, we're going to take control of our money, we're going to take control over our investments, and we're going to take control over our results. And in this ownership economy, this is how we're going to show you how to be financially free in 10 years or less. Because the reality of it is that in the dependency economy, you can find whatever stats you want, right? And stats, I don't know how true they are. I mean, you can find anything to prove anything online. But here's some of the stats that prove, or that at least indicate, that the traditional financial plan isn't working, right? Nearly half of the middle class. I mean, I think this is kind of interesting. I mean, I believe the middle class is kind of getting destroyed right now. But nearly half of the middle class, these are the people who have done everything right. They're going to retire at or near poverty. So if you're open to it, turn to your left and say, hey, my name is, the person I am, and you're going to retire at poverty. Not you, your neighbor. They're going to retire at poverty, right? But nearly half of us.
Left to me.
Good to meet you, right? And the crazy part is we're doing everything right. The other thing is inflation, and you can already start to see the rebranding in Wall Street, right? But the inflation and the added or increased cost of living, and we can talk all about that. Wall Street's already starting to rebrand that 75 is the new 65. Now, they're trying to brand it as, hey, we're living longer, we're healthier. But the real reason they're rebranding it is people can't retire anymore at 65, right? So 75 is the new 65. 81% of people that are nearing the age of retirement, they have 10 years left until they want to be able to retire. They have less than $350,000 accumulated in total. And that's, if we really do the math behind it, that means they'll never be able to retire to the life they want, or they'll be dependent on Social Security. And this is the one that kind of hurts me the most. How many of you have kids? Got some of Mike and Emily's kids here, right? I've got kids. My kids are just entering the workforce right now. And this is the world they're facing. It doesn't work anymore. It doesn't work. And 70% of people in the workforce today, they've just given up. They're going to work until they die. Or there's this, what is the acronym? YOLO, right?
Yeah.
Spend all your money today because there's no future. And I don't like that. I mean, that frustrates me. And so without a clear plan for retirements, this is the trap that most people fall into. If I asked you, how much do you need to retire? If you don't have a definitive answer to that question, this is your answer. There's more. I don't know how much I need. So I'll just keep trading time, running in the rat race, putting money in somewhere else that I don't control, crossing my fingers and hoping that it works out, and hoping that one day I'll have enough to retire. So take a moment for yourself and just put a number in your head. Depending on what you're doing, where your money's going, what is your number? How much money do you need to retire? Do you have a number, like a kind of a round idea of what that is? Because if you don't, then do you actually have a financial plan? And if you don't, how do you know if you're ever making progress? Now, I'm going to give you a number here, and I'm going to give you a tool that you can use to kind of justify the math. I'm just going to assume that you believe that the math is correct on this. But a financial pundit, let me make sure no one's in the waiting room.
I just jumped in.
Oh, you're awesome. Okay, thank you. A financial pundit, anyone heard of Susie Orman before? Okay, Susie Orman pretty much espouses like Wall Street traditional financial beliefs. And a couple of years ago, she was doing an interview. And I don't know if she meant to say what she said, but she said it, and it set the internet on fire. Because they asked her, how much does someone need to retire confidently today? What number do you think she threw out? What would you say? 3.5? 2 million? 3, 2, 3? Anyone more higher? That's a big number. Like, go back to your number. Is it anywhere not near the 3.5 million? Here's what she said. To retire confidently today, and there is math that justifies what she's saying. To retire confidently today, that number right there would give you roughly between $200,000 and $250,000 a year of income. Not bad. I mean, pretty good lifestyle. But if you think about inflation, 10 years from now, that might not be worth as much as it is today. But $5 million. She didn't mean to say that because this underlines the problem with the traditional financial plan. So my invitation for you as we get ready to talk about the alternative world of money, that you have a book in front of you to discuss, anything less than $5 million, that just means you retire with less confidence, you're taking more risk, and you're just more waiting. And I'll never forget when I first discovered this for myself. It was this book right here that opened me up. How many of you have ever read this book, Rich Dad Poor Dad? Man, I'll tell you, I grew up in a solid blue collar family. My dad, at the end of his 8-hour workday, in an effort to avoid debt and be as economically, responsible as he could, at the end of an 8-hour workday, him and my mom would go to the lot that they bought and build the house that I grew up in with a hammer and nails. I can't believe they did it. It's crazy. It took them 4.5 years. But the house that I grew up in, they built. They built. He taught me to save, but he never actually retired. Never retired to the life that he wanted because the math didn't allow it. Now he is retired today, but more than half of his income comes from Social Security. It comes from a pension that is no longer available to 90% of the world. And so here's what I want you to consider. If your financial philosophy, whatever that is, if it's wrong, if it's never going to get you what you want, how soon would you want to discover that it's wrong? Now.
Yesterday.
10
years ago.
10 years ago,
Son
right?
of a-
I mean, the faster we can find out that what we're doing is working or not, the faster we can get on a path of confidence, of certainty that your efforts today, working, saving, accumulating, and preparing for the future, are going to get you what you want in a time frame that's acceptable. So I want you to consider that no matter what you're doing today, I believe that this system, the dependency economy, it's not really your fault. It's not really my fault. It is the system that we grew up in, and the way out is financial intelligence. They don't teach us about money, and they don't teach us about money for a reason. The less you know about money, guess what happens?
You work longer.
The harder you work, the more you pay in tax, the more dependent you become on politicians, the more you vote for increased benefits and Social Security and all the things because it's not working. It is feeding the system the less you know about money. The way out isn't necessarily to work harder, it's to consider you might be actually playing the wrong game. And if you can just be open to that possibility for the next couple of hour or so, then I'm going to open up for you a scenario that this right here, it's not a marketing pitch, it's not a ploy. It is a real mathematical reality when we understand the game of money. I'm going to prove it to you today. Okay, so with that being said, I'm going to come back to this why it matters. You all came here. You could be out working. You could be out with your family. You could be listing houses. But you came here because on some level, you already know this. Money equals time. And if you don't master your money today, you'll trade the rest of your life waiting for one day. And so the objective of today is to help you buy back take more control of your money so you can take more control of your life. Because I believe money's greatest intrinsic value, the real definition of money. No one actually wants more money. It's just a number in a bank account or a piece of paper or however we represent it today. This is what we actually want. We want more control over our lives. We want more options with what we do with that control. This, for me, is what really that title. I had to title it "Retire in 10 Years." I don't actually believe in the idea of retirement. I wanted to meet people at where they're at intellectually. I believe in the idea of this financial freedom. And financial freedom is using money as a tool to build and to live a purpose-driven life. And with the right framework, that becomes possible. And when it becomes possible, the game changes. So
It's fun. Can I add something?
absolutely, please do.
It's funny because they say, what is money? Like, what is money, right? And I have some relatives that were not going to inherit this because they're a different side of the family. They were so worried about money, and he retired with $6 million. And they were so worried about it that they never spent it because they were afraid to spend taxes, that they didn't live the life they could have, and then lost 70% of it because their stock evaluations went down. And so they were afraid to use it. So you worked your whole life to build it up. Then he died 2 years after he retired. And then his wife was luckily able to live with it, but at lower means. And they never even utilized the money because they couldn't change their mindset. It was so hard to get the money over their years that they never even enjoyed it. They never used it as a tool for freedom.
Can't tell you how many times I hear that. Now, that number is
crazy.
bigger than most people have
Yeah,
ever
oh
had.
yeah, for sure. That's why I use it as an example. So I'm like, what?
Let's actually talk about that for just a moment. Why? Why are people afraid to spend the pile of money that they spend their life accumulating? Just throw it out. What do you think? They don't lose it.
Yeah.
Okay.
They didn't want to pay tax.
They want to pay tax. Don't want to leave it to their kids. Yeah.
It's like,
Or they do want to leave it to
my
kids.
kids.
Oh,
They
want
leave everything.
Yeah.
to the
Yeah,
kids.
got it. That is something that comes out quite a bit. Let me
Outliving.
afraid of outliving their money. Okay. That's That's my right-hand man, Dan. Dan and I work together. Dan, you're not supposed to answer those questions.
We had a few minutes. Yeah. Oh, no, they were all good though. I need everybody to speak up a little more.
I want you to consider this. In sports, right, there's a scoreboard, right? There's a scoreboard. If we're in soccer, if we're in basketball, look, my son plays lacrosse, whatever, right? There's a scoreboard. In money, there's a scoreboard too. But the scoreboard that your in-law, was it your in-laws?
Yeah, it's my wife's stepdad's parents, but now he died, so
Okay.
we're out of that.
The scoreboard that we're taught to use in money is net worth, right? They're measuring their success based on I have a $6 million net worth. What they were never taught is how much income does that net worth provide? And when you don't answer, when you can't answer that question, the biggest fear that people have that Dan hit on is if they start taking more out of that $6 million and the market drops or taxes go up or all the things that impact that net worth, they're afraid of outspending their money before they're out of time. Let me invite you to consider this. The scoreboard for financial freedom, is it net worth or is it something else?
Monthly income.
Monthly income.
Yeah.
If we can simplify investing and saving down to one thing, all savings is, all investing is future spending. That's all it is. I want to spend money at some point in the future, so I need a system that produces monthly income. And it doesn't matter what my net worth is. Consider this net worth, it's a public opinion. Like Donald Trump, he's going to get on the news, I guarantee, in the next day or week or 2 weeks, and he's going to say something crazy. And what's going to happen with the stock market? It's going to go down. Public opinion is going to be like, oh my gosh, we're never getting out of this war. Or the new Fed chair is going to get on and say he's going to do something, and oh my gosh, he's going to lower interest rates, and the stock market goes up. It's public opinion. We don't control public opinion. Public opinion is irrelevant to real wealth. Freedom comes from income that comes from assets. Does that resonate with you guys?
Yes.
Okay, cool. Let me tell a quick story, and I'm going to tell you how I discovered this because I did not ever think I was going to be standing in front of a room of amazing producers talking about money. That's not why I started all of this. I started this for me because for me, I've done awesome things, but financial freedom for me is this. This is what it is. It's experiences, it's life, it's my family. And yes, I am financially free today, but it's not where I started. In fact, I started probably like a lot of you. I'll never forget when I graduated college, right? My beautiful wife, Bethany. I had a side hustle paying my way through college, and I got my first college job, right? And I remember I had to move from Utah to Tucson, Arizona. Anyone ever been to Tucson, Arizona? Yeah. I mean, I got to Tucson, Arizona. I'm like, where's the mountains? Everything's pokey down here. It's hot. But I moved to Tucson, Arizona, and I was, I was a high school dropout, to be honest with you guys, to go a little bit back. And when I kind of got my life back on track, all of the social conditioning kicked in for me. It was like, go to school, get a job. And so I did all of those things. And when I got this first paycheck, it felt like a little bit of a symbol of success, right? I'm now a college grad. I'm 23. I have a wife. She followed me to Arizona. And I got this paycheck. And this was back in the day when we got paychecks. And I put it in my back pocket and it saved it to the end of the day to open it. It's like, hey, I arrived. I went to the Bank of America. I took out the paycheck. I opened it up and I looked at it. And I had to flip it over a couple times, right? Because I'm like, where's all the money? I mean, where's all the money, right? Taxes, insurance, moving expenses. And a little voice in the back of my head started to go off. I should just quit now. But now I have a wife and I have a child on the way. And I felt this sense of responsibility, right? This sense of, that's crazy. I can't quit. So I resolved that I'm going to figure out the game of money and I'm going to retire early. And the reason I wanted to do that, I could already sense this corporate race wasn't going to be for me. I didn't want to report to a boss named Rob. I didn't want to sit in a cubicle. I didn't want to live in Tucson, Arizona. My life was being dictated to me in pursuit of a paycheck, right? And so I thought I'm going to retire a little bit early. And in order to do this, I got to figure out this stuff. I got to figure out how to work hard, save a lot, invest and grow my money, and I'll retire in my 50s. That was my goal. I'm 46 today. As I started climbing the corporate ladder, right? I went from making a little bit of money to making a little bit more money. A little bit more money and a little bit more money. And in the beginning, that felt kind of exciting. I felt like the harder I worked, the more I could make. And the more I made, the more I put in my 401k and IRA and brokerage account and all of that stuff. But you guys kind of know this, right? Money is a game of time. And as I pursued more money, I ended up trading more time. And I kept telling myself, this is just what you do, right? And once I've traded enough time and have enough money, I'll buy my life back. And a year went by like that. 2 years went by like that. 3 years went by like that. I remember I took a promotion after I'd moved my family all over the Midwest, from Arizona to Colorado to Florida to California to Denver, all over. We were living everywhere. And I took a promotion. My family lived in Texas at this time, and they were sick of moving, and I was sick of moving them. So I flew to Indianapolis. Every week, I'd fly to Indianapolis. I'd work in Indianapolis. I'd fly home on the weekends. Fly out, fly back. You can imagine what kind of husband I was, how present I was, what kind of father I was. But I kept telling myself one day I'll have enough money and I'll buy my life back. And in the beginning, it felt like it was actually working. I went from saving a little bit of money to most, as much as I could, 25%. I maxed out my 401k to get the company sponsored match. I started doing option trading and day trading to try to make things go faster, right? I followed Jim Cramer back in the day. I even bought some dinar. Does anyone know what this is?
Not
Okay.
currency.
Yeah, Iraqi currency. Now, here's the one piece of financial advice I'm going to give you. I'm going to give you this financial advice legitimately and specifically. If you ever find yourself in your financial life taking advice from someone who calls themselves the dinar daddy, you're probably doing it, right? So if at any point in time I stand up here and I say I'm a daddy of any kind, like just walk out of the room. Right? But I thought it was working. I thought it was working, and then one day I would have enough money to buy my life back. Now, you guys all know how this goes, right? In 2008, for me, this was my first wake up call. 5 years out of college, my net worth just crested $100,000. And in 2008, I watched that net worth go from 100,000 down to 28,000. And here's the interesting part. So at first, I was ashamed to talk about it. I thought that I had done something wrong. Now, I'm so grateful for 2008 for two reasons. Number one, I recognize I had no control. And without any control, how could I ever have a plan to retire? That idea kind of dissolved in 2008. But the biggest thing 2008 shared with me was it was a window into my future. I'm 5 years out of college. I'm pursuing this idea that one day I'll have enough money, and I'm following people that have traded the best years of their life. I'm following people that I didn't really want to model my life after, but that's who I'm following. And I watched their retirement plans falling and melting in front of them, 20, 30 years ahead of me. And I realized that's me if I keep doing what I'm doing today. And this opened me up to like, maybe the system isn't working. Now, if the system isn't working, I didn't know what to do. And so I was left with questions. But what really opened me up to getting emotionally committed, mentally and emotionally committed to answering those questions was this. My youngest son, because my oldest son, Doug, he was born with a heart defect. I knew about it. We knew about it when he was born. I'm an optimist. The doctor told us he might grow out of it. And so every checkup he went into, it's like, okay, he's doing okay. He's doing okay. He's doing okay. And I went on about my life, trading my life and my time for money, telling myself I'll buy my life back. I'll be a better father when I have enough money. I live up in Indianapolis right now, and my wife gives me a call. And she says, Doug needs an emergency open heart surgery. Taking him to the hospital right now. She had taken him in for his checkup, and the holes in his heart were now pumping blood out of his heart into his lungs, and he was drowning. And I'll never forget that moment, because in that moment, I live in a different state than my family. I had just lost everything I traded the last 5 years for, and I'm about to lose everything that really mattered, that I was sacrificing for one day. And I came back and I spent the next couple of weeks in the hospital, primary children's. And I questioned everything about my life, everything. My role as a father, my role as a husband, my role as a provider. I didn't know what to do, I'll be honest with you. I didn't know how to balance pursuing one day and living in the present. I had no idea how to do it. But when everything is breaking around you, your perspective starts to be open to something new. So I started to do an accounting of everything I had traded my life for. My 401k, it was down about 60%. My option trading account was down about 80%. My brokerage account, it was down about 30%. I've got to bring the dinar. I've got to bring it. I had the dinar up, and I forgot to share with you guys at Rise Up Live. I still keep it as a reminder to just don't be stupid, right? Don't be stupid. But the thing I realized is I had no control, and I was expecting a different outcome than everyone else was getting, right? I thought I could do it better. I thought I could work harder. I thought I could put more money in. I thought I could outwork a broken system. And when everything's falling apart, when the night is darkest, it's right before dawn. And I picked up this book, and I'm grateful for it, right? I'm in the hospital. I'm trying to figure out the game of money. And my pursuit of figuring out the game of money as a provider was I'm really trying to figure out the game of life. I had to provide. I had to provide. And I also had to live at the same time being a father. How do I balance those two worlds? And I'll never forget when I read this book, man. It was like I wanted to pick it up and wrote it in full. Because everything that it said confirmed what I was feeling inside, that everything I thought I knew about money was fundamentally wrong. Now, that could be disheartening, and it was for a moment, but it is also actually very empowering because if the game I'm playing will never work, like for me, I'm an all in or all out guy. And so if it's not going to work, I literally just flipped the game board and said, okay, well, what's the opposite of this then? And this opened me up to learning a few things I'm going to share with you inside of this framework today. And I'm grateful for the mentors. We got Kylie. I'm grateful for the mentors. I'm grateful for the people that have helped guiding me along this. I did not invent this system. I did not invent this out of my own mind. I pieced it together from people that have done amazing things. But I started using the system I'm now going to explain to you inside of this book. And for the first time ever, I took control over my money. I took control over my results. I learned a lot by making a lot of stupid mistakes. But as I had control over my money, my investments, and my results, I started to become smarter. And as I became smarter, the game of money became easier. And 4 years after losing all my money in 2008, my boss came back to me and said, "Hey, Ryan, I've got a promotion for you." Now, I knew what this meant. I'm a territory manager. And at this point, I'm managing one local geographic territory, so I don't have to travel. And 2008, companies were still tightening their belts, right? And so they had just fired three territory managers, and I'm going to take over three more territories. And he's sitting in front of me telling me about this promotion where I'm going to make a little bit more money, and it was so fun. You guys ever watched Charlie Brown back in the day? I remember when the mom is talking, it's like, wow, wow, wow. Like he's over there talking to me about the money and da da da. And in the back of my head, I'm adding up my cash flow. And I'm like, okay, this base of assets, it pays my mortgage. This base of assets, it puts food on the table. This base of assets, it keeps the lights on. And I'm adding it up over and over and over again just to verify it. And I realized I wasn't financially free in the sense that I could travel to Europe and do whatever I wanted, but man, I could keep the lights on. I could put food on the table. And Rob snapped me out of my reverie and he said, "Are you ready to take this?" And I looked up at him. And in one sense of like quiet confidence and maybe a little bit of stupidity, I said, "I quit." And it was the most liberating words I've ever said. Like as soon as that word came out, that statement came out of my mouth, I wanted to grab it out of thin air because I didn't mean to quit. I want to shove it back in my mouth. But it was that weird moment that at first I'm like, oh my gosh, I just quit. But then it was like this overwhelming sense of just exhilaration. I'm free. I quit. And he tried to talk me back into it. I'll pay you 15,000, whatever. And I'm like, I quit, I quit, I quit. Now I had to do the hardest thing of all. I had to walk out to the parking lot because I didn't walk into the office that day with the intention of quitting. Pick up my phone and I call my wife, right? I'm like, hey, Beth, interesting news. I just quit. And there's a silence on the other end of the line. I felt like it went on forever. But after a moment of silence, she said, "Ryan, it's about damn time." And that started everything for me. That started everything for me because I quit, I walked away, and people started asking me how I did it. And that's what eventually created this book and this system. But I'll tell you the thing I'm most grateful for from all of this is this right here: quitting and understanding how to measure success with cash flow and taking control over my money and allowed me to buy my life back. And this is the greatest second chance I've ever been given, is to be the father of this young man right here who came out of heart surgery. He's now 20 years old. You can see he's taller than me, he's smarter than me. And being his father, being given a second chance to be his father has been the greatest blessing of my life. That money allowed me to be more present as a father with him growing up. So if you're with me on this, let's go into a system for how all of this works. You guys with me on that? Okay. This book, it gave me the mindset. This book, I'm going to give you the tactics. And I'm grateful for this book. Right back here, Robert Kiyosaki. I went back to two of my mentors. I co-authored this book with Robert Allen. How many of you have ever heard of Robert Allen before? He's kind of the OG in real estate investing. It was his book that kind of got me on the path of real estate investing. And so when I went back to these two mentors and I said, "Thank you for helping me be free." And, this is after I created a community and helped a bunch of people do it. Robert Allen co-authored this book with me and Robert Kiyosaki forged it. And I'm grateful for this because I feel like I stand on the shoulders of people who figured out a system that allowed me to break finances down into two simple ways. I want you to consider this. There are two worlds of money. You get to choose. This is your first exercise in your freedom, is will you operate in the dependency economy? And in the dependency economy, you're going to work, you're going to save, you're going to hope, and you're going to repeat. And you're going to hope after a long enough cycle, after hoping long enough with $6 million, maybe you've got enough to buy your life back. The other side of the economy, it's not doing the opposite better, it's doing the exact opposite. And it's the ownership economy. We're going to take control over our money. Taking control over our money is basically saying, look, my time matters. I already traded my time for the dollars that I have. I'm going to honor those dollars that are in my bank account and I'm going to take control over them and use them to create cash flow. I'm going to build a system that gives me financial freedom with cash flow, but also allows me to do it by owning my time. And this is a different mentality when it comes to real estate investing. I'm going to talk about now. Everything I've shared with you is inside of this book, so I'm going to kind of go through this part pretty quick. But I want to get tactical with you now. Now this is open, so you can ask me any questions. I'm going to say.
Is there anyone else in the waiting room? Someone
Oh,
else.
waiting room. I don't see anyone in the waiting room. Okay, so this is where I'm going to get tactical. You can ask me any questions, or we can slow down. There are three gears that put together a system. My recommendation to you is you don't need more investments. You need a system. With a system engineered to get the right outcome, and the outcome of this is financial freedom in 10 years or less, we can then go back to products and say, what products do I need in the right order to get the outcome? Everyone in the financial space, everyone in the financial space, they want to sell you a product. And what most people end up with is a bunch of products, but no plan. We're going to start with the plan and then reverse engineer what products make the plan possible. Does that make sense? Okay, so our plan, what is it? Financial freedom in how many years? 10. Now, I love that because when we shorten the constraint, some people come to me, they're like, I'm going to do it in 3. More power to you. Awesome. But wherever you're starting from, it is 100% fundamentally possible to achieve financial freedom in 10 years or less. Whether you're starting from nothing, you're starting in the hole, or you're starting with resources. If you have resources, you can do it. Emily, we've seen people do it in what?
Yeah. What was that? 14 months.
14 months, right? Now they have resources already, but no matter where you're at, we're going to shrink the constraints. Rather than retiring one day with my fingers crossed at 65, now we have something to measure against. That gives us more urgency and more context with the decisions that we make today. Okay. So, first gear number 1 is this, it's an empire builder. Now, this is what I like to call myself, what I like to call those in our community. Dan's wearing a shirt. We have to take on an identity. And the identity is I'm going to use money to build an empire. I'm going to use money to build my empire. I'm going to use money to build a foundation that no one can break. This gives me freedom. And there's a big problem in the game of entrepreneurship. Now, I work with a lot of entrepreneurs, a lot of realtors. You guys have the great opportunity to make a lot of money, right? How many of you know a realtor that's making like good money, right? Good money. That's the income game, right? And you think I think the same way. I'm like, oh my gosh, they're making really good money. I'm going to do what they're doing. And you should. You should. But I want you to consider this. If you can break the game of money from income to wealth, those are two different games. And in the beginning, for someone who can make money, the income game is, and I could draw this line and maybe it goes vertical, but the income game is, that's the thing that we understand. Effort in, dollars out. More effort in, more effective effort, more dollars out. That's what this mastermind probably does a lot of. How do we make more money as realtors with a better system, a better process, better listings? That's the income game. And the wealth game, it starts off kind of slow. In fact, the wealth game, when we start talking about wealth, it's like, it's kind of slow. It's kind of boring. I can just go trade my attention. I could sell another house. I could get another listing. I can make a bunch of money. How many people do you know in the game of whatever, making money, that they've made a good amount of money, but they have very little to show for it? This is the problem with not starting when it looks kind of boring. Because at the top of the wealth game, it's like, oh my gosh, that's what I want up there. But how do I get from here to there? I've got to trade enough time with enough disciplined effort to get there, right? This is the payoff point. And so if you will follow me on a journey for 10 years, I'm going to show you how to get to that payoff point where your wealth exceeds your income. I want you to consider this. Making more money will not solve your wealth problem. And if you don't get comfortable and confident about taking some of the money that you made and putting it into a system, you're going to feel hunted by your profession. Whatever it is, you've got to wake up and list the next listing. You've got to wake up and do the next thing, take the next client, because this now becomes the only way you can sustain your life. I've met so many people. I mean, I've met 7-figure entrepreneurs that they've made money, but they're 90 days away from complete bankruptcy, right? They have very little to show for it. They own very little of their time. So if you'll make that commitment, then this is what the rest of the system is going to do. I'm not going to teach you where to invest your money. I'm going to teach you how to build a system that allows your money to flow in this system to give you more confidence. Now, I don't know if this audio is going to work, but I'm going to play this clip because this is what we're going to go into next. Okay, you guys ready? So what I'm going to share with you next is this. Oh no.
can't end up like that. I have got to make money and save it. And I have to do that thing that rich people do where they turn money into more money. Can you teach me how to do that?
With my eyes closed.
Oh, good.
Okay, it's gonna be really fun. Who wants to do that thing that rich people do? All right. We're gonna do that thing that rich people do. I'm gonna share with you how to turn money into more money. And the first thing I'm gonna share with you is gonna challenge a belief. It's a challenge a belief for me. Okay. The first thing I'm gonna share with you is you need a capital engine. You need an income engine. That's your profession. Now you need a capital engine. You need a way to aggregate your capital. I call this a vault. A vault is where we're gonna position our capital to where what would your life look like if you just had a way to make money and keep it. In the beginning, it would be kind of boring, right? I made some money, I kept some money. What if you did that for 1 year? What if you did that for 5 years? What if you did that for a decade? What if you did that for 20 years? Made a little bit of money, kept a little bit of money. What do you think would happen over a long enough period of time? You'd wake up one day and you're like, holy crap, I did that thing that rich people do. I'm wealthy. How did it happen? Well, what if you never lost money for the rest of your life? How would that look and feel like for you? I'm not going to brag. I'm just going to state it as a point inside of the system. I've been running this exact same system in my life since that hospital, since 2009. I have never lost money in 17 years.
Wow.
Never lost money in 17 years. Now, I'm just barely getting going on the compound interest curve, right? Things are just barely getting exciting, but it gives me a sense of confidence to say, look, if I can just make and keep money, the game of money starts to get really, really easy. This is the vault. It's going to give us a place to protect capital, grow our capital, maintain liquidity and control, and it's going to give us the bridge going from the dependency economy into the ownership economy, which is leverage. Okay. Now you might be thinking to yourself, what the heck is the vault? Let me give you how I interpret it, and then I'll give you the actual tool of what it is. I need a place to put my money where I can centralize my capital. I can deploy it, I can multiply it, I can replenish it, and I can repeat it. In fact, the easiest way for me to think about this, we live in Utah. And Utah 100 years ago, how many people live in Utah? I don't know, a couple thousand, right? Maybe 100,000, 50,000. How many people live in Utah now? Lots, right? And too many, no doubt. Every time I go out on the road, I'm like, where do all these people come from? Go back to California. Sorry, I'm a Californian. So. Yeah. But we live in Utah. Now, we live in Utah, and outside of this year kind of sucked for snow, although we got it at the end a little bit. We have these reservoirs, right? And I love these reservoirs because a reservoir, without a reservoir, the water would just flow onto the mountains, it would melt, and it would flow out to the sea, right? But Utah's been able to sustain its population and send water to places like Arizona and California because of a reservoir, right? We accumulate the water in one place as it melts, as the snowfall melts, it accumulates in one place. We get to enjoy it. We get to go out and, water ski and have a great time. And then we dispense the water out in a controlled fashion, right? And so if we think about this as it relates to money, what if I had a place to take all my savings, my cash flow, equity, all excess capital, all the money that's coming into my life, and I had a place to build it up inside of a reservoir, and then I could let it flow as necessary inside of my financial world. Here is what the vault is. The vault is an overfunded, high cash value life insurance policy. Now, you might be thinking to yourself, what the crap? I thought we were here to retire in 10 years or less. This dude's talking about life insurance. Have you guys ever heard of this before? What is it? What is a overfunded whole life insurance policy?
Infinite banking system
It's a system.
where you can put money in there and have a life insurance that will pay out at your death, but you can also access that money, borrow it to yourself for about the same interest you're earning on it, and then you can go monetize that and earn more interest.
Have you guys ever heard of that system before? Okay, I want you to think about this. Okay, let's take the tax code for just a moment. What is the greatest destroyer of our future wealth?
Taxes.
Taxes. So if I raise my hand and say I don't want to pay taxes on my future wealth, what are my options?
Tax evasion.
Tax evasion. And that works until it doesn't, right? Right?
I like
Yes, dying.
Okay, besides dying and tax evasion, do we have any better options than not paying taxes in the future?
Assets, right? And all that lots
Debt.
of debt.
Debt. Okay, we're going to talk about that for sure. Outside of debt, what are our options?
Life insurance.
There's only three. You can put your money in a Roth IRA. That's tax-free distributions in the future. If we believe in the debt-paying ability of our municipal government, we can give our money to them in the form of an IOU. It's a municipal bond. The interest that we earn on that is tax-free. Or we can put our money in life insurance. There's only three options, right? Now, I want to use life insurance as a way to get the tax benefit, but I want to treat it completely different. So inside of the life insurance tax code, there's a way to put as much money as you want in these policies and buy the least amount of death benefit simply to keep it qualified as life insurance. That minimizes your expenses and it maximizes your cash value. That's what a vault is. I want to build up a reservoir of cash that I could put money into a place that eliminates the IRS. And so basically the way this works, most people when they think of life insurance, they're like, hey, I need insurance. I'm going to go to the insurance agent. I'm going to get the most life insurance I need because you guys, you should have life insurance, but that's not what we're talking about here. And in order to buy this life insurance, the only way you win is what? If you die, right? So I don't want to pay a lot of money for that. So I'm going to buy the least amount of life insurance that I need, or I'm going to buy the most insurance for the least amount of premium. That's the way most people buy insurance. Now we're going to go to the insurance agent and do the exact opposite. We're going to go to the insurance agent and say, hey, can I put this? I've got 100,000, I've got 200, I've got $1 million. I want to put all of this into a policy. I want to write a premium check as big as I can possibly write it. But in exchange for that, I want you to give me the least amount of death benefit for it. Does that make sense? All of that excess cash over funding, it now rolls into an account, and you're like, what the heck is this dude talking about? But it rolls into this account as cash value. I want you to think about cash value kind of like equity in any investment, whether it's a brokerage account, an equity in your home. Once it's in this account, all of this cash value, it earns a guaranteed return plus an annual dividend. Now, the companies that we work with on these policies, they're private companies, so you can't buy stock in them. But all of the cash, whether it's 5,000 or 5 million, it doesn't matter. All of the cash is earning a guaranteed return that they've contractually guaranteed to pay for the rest of your life. These companies have been in business for no less than 150 years. Some of them are close to 200 years. Everyone heard of New York Life, Mass Mutual, Penn Mutual? Those are big companies, right? They're called mutual, but do you know you can't buy stock in them? I can't go to the stock exchange and say, hey, these are they're the most successful companies in the history of our country. You can't buy stock in them, but when I have a overfunded policy, their profits now become my profits. Does that make sense? The dividend that is paid out to me, I qualify as life insurance, so it's all tax-free. My money is 100% safe, private, and protected. It's a private contract between you and me, a private individual. I get a future stream of tax-free income, which I'll share with you in just a moment. And I do have life insurance protection. I'm not really buying it for life insurance, but I have to have a minimum amount of death benefits. All of that cash now is liquid and it's a line of credit. You guys follow me on this?
Question,
Yeah.
so sometimes I have a little bit extra money, sometimes I'll come into a big chunk that I'm not sure where to invest. Does that have to be like a fixed, like, let's say, you know, you got a $2,000 premium. And 1 month I can put 10,000 in, 1 month I can put 2,000 in, 1 month I can put 100,000 in. Is that how it works? Or
There's
does
a
it have
ton
to-
of flexibility in them.
Or does it have to be like 10,000 every single month?
Yeah, there's a ton of flexibility on the high end and the low ends, but the one downside with this is there is a range. Once I set up my contract
Okay,
and I buy that minimum death benefit, it's gonna also define how much I can put into it.
okay.
Now, I'm not saying this is a rule of thumb is what you should do. I have 17 policies today. And you're thinking, why does that dude have 17 policies? My very first policy that I set up, the most I could put into it was $10,000 because that's all I could see possible coming out of the hospital with my son. And so every year, as I've built up the capacity to have more savings, more income flowing through my life, I open up bigger policies that expand my reservoir to have more flexibility to put more money. But does that kind of answer your question? So that is the one downside of this is it is constrained to a high end and a low end once your contract is set up. But people, Mike and Emily, you guys have contracts. Most people in our world, they have, you know, multiple contracts as their capacity to fill those
So to
contracts.
change it and do more, you just open a new policy.
Yeah, and we can plan for all of that from the very beginning, so it's super, super easy. Okay, now we're gonna have some fun. You guys ready? Now we've got a place, we've got a capital engine, that's my income. We've got an income engine, that's my income. We've got a capital engine, that's the vault. But now I've got this thing that's a liquid line of credit, okay? The vault's gonna give me a return that's 500% better than a bank account. So it's way better than keeping my money in a bank account. But what if I could do this little thing that rich people do where I just turn my money into more money, right? Would that be kind of cool?
Yeah.
What if I can have $1 working in 2 places at the same time? That's where the game starts to get a little bit interesting. If I could have my money compounding and growing inside of a vault, but I could leverage that line of credit without taking money out of the vault. The way the line of credit works, I borrow the insurance company's money, which means my money continues to compound and grow. And I could go out and I can buy an asset. I'm going to skip this and I'm just going to go right here. The central focus of the vault, think about it like that reservoir. I want to get as much money that is currently flowing through my financial system. Like sometimes at our workshops, we do these little exercises where I have people go back and figure out how much money they've actually earned inside of their entire life. It's really fascinating and it's really depressing at the same time. Right? I mean, you look at it, you're like, oh my gosh, I'm a multimillionaire. And then we look at our bank accounts and our investment accounts, like, oh my gosh, I have nothing to show for all of that money I earned. So the goal of this is to try to get a system where I can make money and I can recapture and recycle as many dollars into a system. I can put it in there. I can have this reservoir filling up. And just like in a reservoir where I get to play on the water while it's waiting to dispense the water, that's what I get to do with this vault. I get to use it today and still stay on track for my money long-term compounding and growing. Okay, that's the metaphor of a reservoir. Now, you don't have to believe me, and I'm not asking that you do. There are numerous examples of people that use the vaults, but I'm just going to give you probably the most prolific. Walmart does, I know tons. Walmart does. Half of our politicians that we know about do. Our current presidents, our previous presidents. I don't know where they get all. I mean, I know where this president gets his money. And the last president, I don't know where he got all of his money, but he has millions of dollars inside of cash value in a private contract. And the only reason he shared it is because he disclosed his financial records running for office. Okay. But banks. Think about where they keep their money. Banks are required by the Federal Reserve to keep a certain amount of money on reserve. Now, we think about a bank as that's where our money's safe, right? But a bank, they don't think about the bank as that's where our money's safe. We put our money into the bank, and what do they do with it? Anything they have to have in reserve, they put it in bank-owned life insurance. They have contractually, they're limited. The IRS limits how much they can actually buy, but they have, as of right now, 75 billion, that's not true, $25 billion in cash value spread out over multiple banks. That's where they keep their reserves. And if a bank's going to do it, maybe we could do it as well. Okay. So we're going to use this line of credit now. We're going to have some fun here. We're going to use this line of credit where my money's going to compound. But what if, just go with me on this. Everyone in here knows the power of real estate, right?
Yep.
We're going to talk about that not as a realtor, but as an investor. I think sometimes this is where realtors misunderstand you have the most powerful growth assets and you're selling it every single day. What if you could sell it and keep a little bit of it, okay? What if we use our line of credit to buy rental real estate? Okay, so this is going to get us to the third engine in the capital machine, which is our asset engine. We need a way to deploy our capital into assets that produce cash flow, income. We need a way to generate income, tax advantages, and equity, and we want to use leverage to scale. I'm just going to throw it out there just so you guys can kind of chew on this for a moment. But when I buy leverage, or when I use this system, I can turn $1 that I've traded my time, effort, and energy for into $5 working dollars. $1 into 5. How did we do that? Boom. What's your name?
Loriana.
Loriana? Loriana. Talk to Loriana after this. She just unlocked the code. If I can take $1 and turn it into 2 inside of my vault, and then take that second dollar line of credit and use it as a 20% down payment, and the bank will bring $4 more to the table, $1 just turned into 5. If I can turn $1 into 5, is it possible I can do something that most people will never accomplish in their entire life and do it in 10 years or less? That's the secret. Okay, so let's actually put together this system now and figure out how to use this system to create financial freedom. Now, I'm going to go a little bit. I really think the game of money is the game of money, right? In Monopoly, lacrosse, whatever game we want to play, if we don't know the rules, can we ever win? No. I'm going to open up the curtain just a little bit so we can learn and understand the rules of money. And I think inherently, intuitively, we already understand these. I'm just going to point them out so you can see them, okay? We can all feel these rules operating in our world, but we're going to look at them today so we can understand. The rules of the game of money changed, and no one updated us, no one told us. They changed in 1971. Do you guys know what happened in 1971?
Gold standard change.
Yeah. Now, did Ryan come up here to talk about gold? Not really. I came up here to talk about
currency, right? Yeah. The fiat system.
You got it. Here's the game. Pre-1971, savers weren't losers. Pre-1971, I could save my way to financial freedom. In fact, pre-1971, every $20 bill or currency that was issued, it came with gold or a precious metal backing that dollar, which meant in order for them to print more money, they had to have more gold in reserves. That kept the Federal Reserve in check, and you could save your way to financial freedom. Pretty simple, right? The reason for that is I knew what my money would be worth 20 years from now because it retained its purchasing power. In 1971, when we went off the gold standard, now we pull it out and it's debt. Like we can look at it. The government is telling us exactly what money is today. It's no longer a store of value. It's now an IOU. It's government-backed debts. And I don't know about you, but they seem to really like debts, right? Guess what the national debt is up to right now? 39 trillion. It's crazy. But let me share this with you. This is how we gotta understand it. Pre-1971, this is inflation. This was the cost of living. I could save my way to financial freedom. I could put $20, $100, $1,000, $1 million, earn a good interest rate. I could pull it out in 1970 and would buy the same stuff, the same goods and services, the same gas in my tank, the same medical supplies. It would buy the same stuff. When we went off the gold standard and we started printing money, I don't know about you, but that line goes a different direction. That's flat. It goes straight up. Over the last 60 years, savers have become losers simply because of printing money. If we just go back, and this is where it's getting, I don't know where this is going to end, but this since 2000, we have increased. I mean, look at that. That is vertical. We have increased the money supply. Let's see, 40% expansion in the money supply since just 2020. Do you guys remember back in the day when we used to drink Kool-Aid? Did anyone ever drink Kool-Aid or their parents drank Kool-Aid, right? Remember, we'd get those little packets, right? And you'd get a jug out, you put the packet in the jug, you'd mix it up, and it would taste great. If you had a bunch of friends over and you only had one packet, what would you do?
Add more water.
Add more water, right? What happened to the Kool-Aid?
Diluted.
It didn't taste quite as good. This is what's happening with our money supply. We're just adding more water. And if we really want to be honest about this, from 2000 to 2025, the average increase in just the money floating around our economy has been 6.5%. Unless production has gone up by that much, inflation is 6.5%. You can't outsave the government system of printing money, because if inflation really is 6.5%, the cost of living is going to double every 11 years. And we've felt that in the last 5 years. Most people are so mad today, they just don't know what they're mad about. This is what they're mad about. We think it's a Republican, we think it's a Democrat, we think it's them, we think it's that. It's the system of money inside of our economy. Donald Trump, Republican. What's he doing? Printing money. Joe Biden, Democrat. What's he doing? Printing money. It's the same game. It doesn't matter what side of the aisle we vote for. From an economic standpoint, they're playing the exact same game. Okay, so if we understand that, then if the government is printing money, this is really what it's like. Savings is kind of like this. I can't walk up the escalator fast enough. And if we're Utah people, I can't shovel the snow when it's snowing. Like, it doesn't work. I can't outsave a broken system. If the government is doing this, there's only one solution. Okay, this is the solution. I have to convert fake money. It's just a number. Like when I say printing money, they're not actually running dollars through a printing press. They're doing it through the monetary system. I need to convert fake money into a real asset. Now, this is where the game of money, if you can just get this, it'll change completely. What is a real asset?
House.
Man, I got smart people in here. Let's actually go to the smartest people in the world, okay? You guys ready for the smartest people? It's not people on the streets. It's this, right? So let's go to Harvard. This is what they say a real asset is. Does that help us retire? Something that an individual owns or controls with the expectation that it will provide a future economic benefit. Does that help us understand how to retire? No. Well, let's go to Kiyosaki. He gets a little bit closer. Something that puts money in your pockets. We're getting a little bit closer. Now that you understand this idea of what's going on with the Federal Reserve, let's actually refine this definition. I tried as hard as I can to make this as simple as possible. But if we understand that money is a tool and we have to raise our financial intelligence to use this tool, the system has three parts to it. A real asset is this. It's anything a bank will lend against that produces income to amortize the debt. That's number one. Okay. In fact, let me just give it to you like this. I can walk into a bank today. My wife hates it when I say this, so shut off the camera.
Yeah.
I can walk into a bank today with a gun or a property. Either way, I'm getting money. Yeah, that makes sense?
Yeah.
It's kind of like I can just do tax evasion. I get the money, but it's not gonna last very long, right?
Hand in hand.
But if I go in with a piece of property, they're like, oh, cool, how much money do you need, right? So anything a bank will lend against that produces income to amortize the debt. I want the asset to amortize the debt, not my production. And increases in value really cost, not necessarily value. Are the houses worth any more today than they were 5 years ago?
No.
Not really, they just cost more. Why do they cost more?
Because
More dollars.
Dollar.
More dollars chasing the same asset. So it's rising in value. That's how we talk about it, but it's really cost over time because it's in continuous demand. What do I know is always in continuous demand? Think about Maslow's hierarchy of needs. The number one thing, I need a place to live. If I don't have a place to live, nothing else matters. It's in continuous demand and it's aligned with inflation in both cash flow and price, meaning as the government prints more money, it goes up in costs and I can raise my rents. That is the definition of an asset. So if that's the definition of an asset, what do I want to do? I want to go buy assets. So like I want to figure out what the heck, okay? Assets, I just want to turn dollars into assets. So I'm going to throw this out there because this is where the game gets really simple. Let's go back here. What things qualify as assets if we believe this is the definition? Where can I put my money?
Yeah.
Properties.
What about multifamily?
Okay, so any type of real estate, property, a car.
That's an asset depreciating, and some
Okay.
are appreciating.
Well, let's go back to this. Does it produce
that's right.
income to amortize the debt? No. Maybe Turo,
I was
right?
gonna say, unless you rent it out. Yeah, that's
Okay,
right.
so now I've got a
So
car.
it depends.
What does it depend? I've got a car,
Right.
and I'm operating the car inside of a what?
System,
A business.
business.
Okay, so a business, real estate, and I won't go into too much detail on this. I already gave you the answer of with life insurance. Life insurance does this as well when it's funded, set up the way I just talked about. So if I want to be financially free and I want to align my money with assets, I have three options. This makes the game of money really freaking simple. I make money, right, in whatever my business is. I keep my money in a place where I never lose it. I leverage that to buy an asset that rises in price and value, or price and cash flow, and I just repeat the system. Let me share this with you, okay? Does that thing look like the key to your financial freedom? That house was built back in 1950, okay? 1950. I own this house. It's in Indianapolis, okay? If I bought this thing back in 1950, it would have cost me $7,000. If I just held it, bought it, held it, hold it, rent it, right? 10 years later, it would cost $12,000. So it went up by 71% over 10 years. Okay, cool. Well, what if I just hold it some more? From 1960 to 1970, the cost went from 12,000 to 17,000, 42% increase. From 1970 to 1980, the year that the rules of money changed, it went from 17,000 to 47,000. That's when we started printing money. 176% increase in my wealth just by holding an asset. I'm not trying to time the market. I'm just holding an asset that's in continuous demand. If I just keep playing this out, 1980 to 1990, 68% increase, 1990 to 2000, 51% increase, 2000 and 2010, including 2008, 87% increase in the cost of housing. All I have to do is buy assets and hold them. Now, this guy's on his way out, but as these guys just continue to crank more money into the economy, here's what happens. This red line, this is the money supply. We can see the money supply going up, more money going into the economy. The blue line is the price of real estate. They operate hand in hand. And as realtors, what have you seen over the last 5 years? House prices go up. Why do house prices go up? Remember this graph that we had a little bit earlier? Let's go right back here. Why do house prices go up? This right here. That's why house prices went up. They printed more money in the history of the world over a 5-year period of time. Prices in Utah have pretty much doubled, have they not?
Mhm.
I had a dude, we built a house during COVID, the worst possible time to build a house. But I had a guy, we lived in Traverse Mountain. A guy came to me with a briefcase worth of cash, $100,000, and said, just sell me your house. Don't put it on the market. I just want to buy this house. I'll give you $100,000 right now just to sell me the house. Like it was a frenzy during that period of time because there was so much money slushing around the market, right? So if that's all true, then what's the game? The game is really easy, okay? The game is this. If I position my money right, I will get wealthy automatically. Inflation is making everyone poor. It's making savers or losers, but it's making asset owners what? Rich. Some asset owners know the game. Some asset owners fell into the game by default. But when you understand the rules of the game of money, look, I'll be honest with you, I don't morally agree with the way our government and our system is working today as it relates to money. I don't agree with that. It's robbing the future of my kids, and that pisses me off. But I have zero say other than what I do. And I can be a victim of the system, or I can use the system to have an economic advantage. I can use the system to make me free. And this is the game of money, right? If this is the game of money, then this guy knows it, okay? And I'm going to share this with you because it's a funny little clip here. But here's Katie Couric. That's not Katie. I can't remember what her name is. She's interviewing Warren Buffett. And Warren Buffett, she did a long interview with him. And she asked Warren Buffett if he had to recreate all of his wealth, how would he do it? What do you think he said? Here's what he said.
Who's winning in this economy right now?
The rich. Guys like me.
If he had to recreate Berkshire Hathaway in half the time, what would he do? He'd buy up a couple 100,000 single family homes. Not a couple thousand, a couple 100,000 single family homes equal Berkshire Hathaway. That's a lot of single family homes, but do you see what he understands? He understands the rules of the game of money. How do I convert fake dollars into real assets and let inflation, which they just had their annual meeting. The number one thing that Warren Buffett talked about at their annual meeting on Monday, do you know what it was? The runaway train. He said the runaway train of money printing is going to destroy America. There's only one way to protect yourself. There's only one way to be free. It's understanding that there is a runaway train. You can stand in front of it and be a martyr, or you can use it to create your freedom.
Jump on the train.
Yeah, jump on the train and go off the cliff, right? So here's what I want you to consider. Ownership equals freedom. Owning your money, owning your choices, and owning assets. That's what equals the freedom that you're looking for. I'm going to skip this just for the sake of time. And I'm going to get right here to this system because I want to get to the outcome of all of this. And then I want to take as many questions as you guys have, okay? Before I go any further, I just showed you how to grow your wealth. Are there any questions on what I shared with you before I show you how to do the one thing? What's the purpose of all long-term savings?
Future spending.
Future spending. It's income, right? I just showed you how to grow your wealth really well, but you should be saying, who cares? I don't really care. Show me how to generate financial freedom. Show me how to create income. I'm going to share that with you right now. But before I do that, any questions? Was there anything new in what I shared with you? You guys learn anything new? Do you want to throw Rotten Tomatoes at me? That's why I brought Dad. If you want to throw Rotten Tomatoes, turn around and throw them at Dad.
No, Mike, I have a question, and you're probably gonna get into this. It's tough to buy cash flowing assets in Utah right now. So you probably buy out of state, because right now with the current rates, and then the prices, every time I look at a property, it just doesn't pencil out.
100%. I own over 50 properties. Only 12 of them are in Utah.
Okay.
I live where I want to live and I buy where the numbers make sense. And there are pockets of the country where you can buy. In fact, I'm going to give you an example here. There are pockets of the country where you can buy assets, and I'll be honest, cash flow is tight today across the board. Is tight, but cash flow is only one way I make money in real estate. I'm going to share that with you right now. If you guys can consider this, the number one focus of owning real estate, I want the cash flow to keep me in the game
Appreciation
of owning real estate. Okay, because cash flow, that's only one pillar. That's only one way I make money. And it's not the smallest, but it's one of the smallest. It's the permission slip to use leverage. If I'm going to take on bank's money, I better have a source of income to be able to repay bank's money. But that's not really how I'm going to create financial freedom. That's the permission slip to keep me in the game of owning assets. Great question. I'll share some numbers on that next.
I'm sure somebody's in here from title, but there's that new acronym where institutional investors, you're already nodding your head.
Yep.
Where you're only allowed a certain number of properties and how are you working around that right now? I don't remember
20.
The title knows what I'm talking about.
Yep, right. It's not defined yet, but you are already contractually able to own 20 single family homes if you're a joint married couple. Fannie Mae Freddie Mac allows you to have 10 single family homes on your credits and 10 single family homes on your spouse's credit if you file a joint. I'm going to show you how to do what I'm going to show you how to do. 6 figures of tax-free income for the rest of your life with 15 assets. You don't need to be Warren Buffett unless you want to be Warren Buffett. Now, if you want to be Warren Buffett, more power to you. I'm just going to show you how to be financially.
The other option we sell finance, right?
Seller finance. You can. There are so many ways to go beyond that question. I promise you, there's an answer for that. I think it'll deviate us from the core fundamental thing that we're trying to accomplish today, though.
I think one of the things that kind of clicked with me is you talked about the life insurance. I mean, I've got pretty good money. I retired after 38 years. I did the whole gamut that you're talking about. Saved $500,000. It's all in. I don't even know where it's at or what funds it's in.
Isn't that crazy?
It is. But the way you're saying it about life insurance, they actually kind of talked me out of it a little bit. They had me buy some. But the rest of it is, like I said, I don't know where it's at.
Let's talk about that. Okay. This is why does the financial world want to sell you a product?
Make money.
How do they make money in the markets?
When you.
No.
They make a percentage of the gain.
They make a percentage of everything that they manage.
About the gains,
Win,
everything.
lose, or draw, up or down. And guess what? We have videos and we can do a calculator with you guys if you want. In fact, I'm gonna give you guys a resource at the end of this, do some calculations. With a 1% or a 2% annual fee, management fee, it'll destroy 50% of your potential worth. Because it's not just the cost, it's the opportunity cost.
Yeah.
Every dollar that comes out of your account for a 1% fee, a 2% fee, what that dollar could have compounded into is now gone forever. The bigger your account gets, the bigger your fees get. Those fees actually, on a $7 million portfolio, would have cost that individual millions of dollars in real cost and multi-millions in opportunity cost.
Well, plus there's no armor. You're not gonna be able to lend against it.
No, you're not able to lend against it. It's out of your control. Let's go to insurance though too. How do
Yeah.
people make money in insurance? Like an insurance agent. If an insurance agent comes to you and says, "Hey, let's get an infinite banking policy," how does he or she make money?
Be on a policy.
Premiums.
Premium.
Premiums allocated to death benefits. What did I tell you the purpose of the vault is?
Lowest death benefit.
Lowest death
Highest
benefit,
cash
highest
value.
cash value. So in order for you to have a real policy that does all of these things, you need to have anywhere on the absolutely low end, 75% of whatever you put in, up to the high end, around 93% of what you put in immediately available to you as a line of credit. That's getting you the least amount of insurance in the most cost-effective way. Now, the agent is taking a smaller commission, but what is he or she doing that for? Are they trying to, like, in our system, we do life insurance, but we're doing life insurance as part of the system. And the system is designed to get an outcome. And if we come to you and say, hey, don't worry about your cash value, wait until you're 10 or 20, then we're right back to the same game, right? More products, more fees, more cost, you pay the price. Greg, these are phenomenal questions. Okay, before I give you the outcome, any other questions on what we're talking about? Okay, you guys ready to see how to generate six figures?
Yeah.
Who believes you can generate 6 figures of tax-free income for the rest of your life with two life insurance policies, vaults, and 14 single-family homes, ranging between 175 and 225,000? You guys believe that?
I believe it.
Okay.
Mike told me.
Mike told you, right?
He's got a hell of a sweet car that he got from us, so.
He does. He does have it. Okay. So here's the one thing I want you guys to consider. We're gonna do some math on this right now, but 80% of the wealth creation and owning real estate comes from owning real estate. And I think too oftentimes, and I'll be honest, when I read Rich Dad Poor Dad, I'm like, it's cash flow, baby, let's go get it. And before I knew it, I had a bunch of properties cash flowing a couple $100s a month, and I'm like, oh my gosh, savers and losers in real estate too. I gotta have 100 of these things. That's a lot of stuff, right? I mean, if you manage properties, that's a lot of stuff, right? So we're gonna do a little case study on a $200,000 property. This is a property you could buy right here. And I forgot to put in the numbers. But on this property, if you bought it for $200,000, you're gonna put $40,000 down. We're gonna take a bank mortgage for $160,000. This property today would rent for about $1,700, maybe $1,750, right? And interest rates today are what, 6.5%, right? On a investment property. Yeah, 6.5%. So over 10 years, I would have generated, assuming I can slowly raise my rent a little bit every single year, right? I would have generated about $20,000 in cash flow over 10 years. That's not outlandish. That's including a 40% vacancy. So all 40% of the total cash I collect, I assume it goes to vacancy and repair. I pay the bank back, and I make $20,000 over 10 years, right? If I look at that, that's about $2,000 a year. That's about an ROI of about 5%. And this is where people are like, real estate's stupid, right? You're taking all that risk and managing tenants. Like, I can get 5% of the stock market. Real estate's dumb. And they're right. My internal rate of return, I haven't even got my money back yet, right? It's a negative 10% return. I put 40,000 down. I've only got 20,000 back. I mean, real estate's dumb, right? But what they're missing is I own an asset that's in continuous demand that as they print money, I'm getting wealthy automatically. And here's what's happening on the other side of the equation. I buy the house for 200,000, and over a 30-year time frame, the compound annual growth rate of single family homes is 5.4%. There's going to be some markets it's higher, some it's lower. I'm not recommending that you own an asset into perpetuity. There's 1031 exchanges. But if we just assume I'm going to hold an asset and the compound annual growth rate is 5.4%, a $200,000 house today is going to sell for $1 million 30 years from now. We comfortable with that? Over that period of time, I'm going to be paying the bank back with less and less and less and less and less and less valuable dollars. And technically, I'm not paying the bank back. Who is? Renter. I want you to know how much I love this. Okay. I love this because I want to take the bank's money today. I want to buy an asset that's going up in price, and I want to pay the bank back with pennies on the dollar. That is the secret, right? I'm going to take their money today. I'm going to amortize it over 30 years, and I'm just going to pay the bank back with less and less valuable dollars from the rent that I collect. And here's what the math looks like. 10 years from now, the price, I'm going to say value, but the price of the real estate, 338,000, it's amortized by $26,000 over 10 years. I got more in amortization than I did in cash flow. The tenants added more equity to my portfolio than they did in cash flow. Okay, do you guys see that? My equity is $200,000. I bought it for 200. It's now valued at 338. My mortgage, I should have put the mortgage in there. The mortgage is whatever that is. $200,000 of equity. My internal rate of return is 19%. Okay, not bad. But here's the problem. Is this putting money in my bank? Am I financially free?
No.
I've got money on my balance sheet, but how do I walk away from my job? How do I walk away from selling houses? Like, how do we do this? I'm going to show it to you one different way. You know, that's the debt in this example would be 133, equity 204. 80% of our game. Okay, so here's the game now. We need a way to convert this equity into income. This is how we're going to go back to this system. Have you ever had Reese's peanut butter cups before?
Yeah.
What makes a Reese's peanut butter cup so amazing? And
All of it.
what if it was just a ball of peanut butter? That's pretty good. What if it was just a ball of chocolate? Yeah. But when it's together, it's like life-changing, right? I mean, it's amazing. I just shared with you a vault and real estate. By themselves, they're awesome. But by themselves, neither one of them by themselves will make you financial. But when you put them together, they actually do something pretty amazing. Let me walk you through what they do right now. Okay. It's a concept that we call the equity mill. And in the equity mill, the secret that the wealthy understand, and it was already mentioned by a couple of people in here, the secret that the wealthy understand is how to create tax-free income. In fact, let's have one of the most unlikely people ever explain to us how to do this. You guys ready? Who's ever heard of Senator Elizabeth Warren? Throw out the first word that comes to your mind when you hear her name. What was it? Good. What else? Insider trading, crook. What else? Is she maybe a little bit socialist? Maybe a little bit. I don't know. What if she was the secret to generating tax-free income? Do you think that could be possible? She's attacking right now Jeff Bezos, and she's saying Jeff Bezos is a crook. Now, I don't know anything about that guy personally, but she's attacking the way Jeff Bezos generates income, and she's saying it's not fair. It's not fair. So let's find out what she has to say, okay?
Can I answer some of these questions?
Sure, please.
All right, thank you. So I'll start with the first one, and that was the question about the wealth tax. Remember, let's look at someone like Jeff Bezos, who is worth $1 bazillion. He has not paid taxes on all of that wealth. Don't describe it that way. In fact, Jeff Bezos, many years, has either paid nothing in taxes or has paid about 1%. Why? Because his income is very, very small, but he continues to grow his wealth through all of his Amazon stock. And how does he then fund a lifestyle like he does? Not by cashing in Amazon stock, but by borrowing against it. Right now, we have a tax system because it focuses.
What does she say?
Borrows against
his Amazon stock.
And that's what Robert Kiyosaki teaches as well.
Yeah. Let's put this into really, like, sometimes I think you guys understand more than most people do because you're in the game of leverage by default, right? Sometimes what I'll explain this to people is, let's say you went home, it's been a hard year, things have been tough, and in your mailbox at home, there's an envelope from Visa. Prepaid, or not prepaid card, credit limit, $50,000, right? And you're like, you know what? I deserve this. I deserve. Take that credit card out and you go spend. You go on vacation, buy some clothes, whatever you can spend $50,000 on. You get to the end of the month and you're like, holy crap, I spent $50,000. Now, in this scenario, at the end of the year when you're filling out your taxes, you technically had $50,000 more of income, right? You have to claim it.
No.
Why?
Because it's debt.
Because it's debt. Now, what's wrong about that debt?
You have to pay it back.
You have to pay it back. You just mortgage your future, your production to pay it back. But nonetheless, it wasn't taxable because
And there was no leverage. You don't have an asset that's growing.
You don't have an asset, right? You mortgage your production. You're the asset driving that debt, right? So all we're going to do now is we're going to understand this. Income is taxable, debt is not. If we want to break the IRS tax code down very, very simply, there's three ways you can generate income. You can generate income as earned income. This is the type of income that you're basically claiming today on your active profession. If you're putting your money away in a 401k, an IRA, or any type of brokerage account that is, tax qualified, what are you doing? You're shifting your tax liability to the future, and you're going to be taxed at earned income. It is the highest form of taxes you can be taxed in. If you have a CPA, do I have any CPAs in here? All right, sorry. Sometimes CPAs get really mad at me. If you have a CPA that's telling you to put money in a 401k, they don't know it, but they're actually telling you, congratulations, you're going to retire broke. Because the only way you win in that game, that's assuming tax rates stay the same, is if you retire with less income than you have today. There is no such thing as a retirement tax bracket. So every dollar in a 401k or an IRA will be taxed at ordinary income rates, okay?
So if you pull out a large amount, they take half of it. Yeah.
Or a large amount, they take half of it. If the government continues to print money and they're looking for ways to raise taxes, where do you think they're going?
Yeah.
There's a lot of money sitting right there. I guarantee you that's on their radar.
And people will say, well, I'm not rich. I worked 50 years to get this money. Yeah, but you're pulling out 500,000 right now. You're paying 253 in taxes. So
whatever you have in your account, divide it by 40%. 40% of it's not really yours. We think it's ours because it's in our accounts, but before you ever get that back, the IRS will take their share. Now, you can go one step further and you can have it generate in portfolio income. This is capital gains, short-term, long-term, less taxes, right? Better way to do it. Or you can have what we're going to call phantom income. Phantom income, you now understand what this is. There's no place you can turn into the IRS tax code that says, hey, congratulations, welcome to the horror zone of phantom income. But phantom income is how the economy works. It's using assets in the form of debt. And we already know we can do this in real estate. We have appreciation, we have amortization, but now we've added one thing here as well, the vaults. So if we put this together, here is the target, okay? And we build all of this inside of a game plan. But in order for you to retire and generate income for life, here's what you need to have. You would need to, before you retire, have 5 years of your desired lifestyle spending in cash value inside of your vault. So think about your reservoir. All of the money that was going elsewhere, you'd want to build it up and accumulate it inside of this vault. As it's accumulating, you'd want to use it to buy real estate. But before you retire, you'd want to have 5 years of whatever you want to spend in retirement in cash value. If you want to spend $100,000, you need to have $500,000 of cash value. You with me on that number? Okay. You need to own enough real estate. We do have a formula for this for the sake of simplicity. I won't give that to you. You need to have enough real estate to refill your policy every 5 years with cash out refis. And we never want to sell our assets. We just want to harvest equity. That doesn't mean we'll always own the same house. We can use 1031 exchanges, but we're always going to own assets. Okay. You with me on this? If all of this is true, then we're going to recreate Jeff Bezos' system with 14 single family homes. Now, this is a real case study from someone inside of our community that these are their numbers, but here are the numbers right here. When they retire, they would have one of real estate portfolio valued at $3.4 million. Okay. Take $3.4 million and divide it by 14. Can someone do that for me real quick? Do they have a calculator? $3.4 million divided by 14.
42,857.
That's 14 houses valued at about $242,000. Not outlandish, is it? That's pretty reasonable. So $3.4 million. They'd owe $2.1 million in mortgages, right? In debt, and they'd have about $1.3 million in equity. That's their real estate portfolio. Okay. Does that seem outlandish?
Yeah.
They'd have, in this example, they want $120,000 of income. So they'd have $650,000 in cash value. This means all of the profits that they generated, their savings, cash out refis, they just built it up in this reservoir. And now they have $650,000 in cash value. Now, I should have put this in here. When you take a policy loan from these contracts, these are private loans backed by a private company. There's no approval required. You don't have to tell them what you're doing. You don't have to tell them what it's for. It's your cash value, and they allow you to use it as a private line of credit. Policy loans easy, yes or no?
Yes.
Super easy, right? Super, super easy. So in this example, if they wanted $120,000 of income, whether they want to take that monthly or quarterly, they would take out $120,000 as a policy loan. Debt is income, spend it, right? It's tax-free, it's non-reportable. If that was the only source of income they had that year, they wouldn't even have to file a tax return. It's non-reportable income. Okay, private loan provision. And what are they going to do with their real estate? Is it cash flowing? Maybe, yes. But I don't care. Cash flow is just keeping me in the game of owning real estate. You guys see what's happening? So I took a policy loan, tax-free income. Now what about year two? Well, in year two, I'm just going to take another policy loan, $120,000 of income. Cumulatively, I've taken 240,000 out. I would have $246,000 now in policy loans and 436,000 of available cash value to draw against. Now, here's the crazy part. As I'm taking policy loans, remember previous year one, it was 650,000. It went up to 682,000. Why?
So you got interest off of the amount.
I got interest off the amount. My money's
You got like
continuously
4.5%,
compounding.
5%.
5% on $680,000. So money is adding into my account. I'm taking the loan from the insurance company, not out of my account. So it continues to compound and grow. And my real estate, what did it do? It went up in value a little bit. I amortized my debt a little bit. I got a little bit more equity. And if I just play this out over 5 years, right? Let's just go year to year 5. If I play it out over 5 years, my cumulative cash value at the end of 5 years, my $650,000 would have compounded to 788. I'm taking another $120,000 in policy loans. That would have taken $663,000 total in policy loans plus interest. I'd have $125,000 of cash value available left. I have a real estate portfolio now valued, same 14 properties, now valued at 4.2 million. I'd have 1.9 million in equity and 2.3 million in debt. No, whoops, flip those around. 1.9 million in debt, 2.3 million in equity. Does that make sense? Now what? I'm out of cash value.
You refinance and pay off.
Baby, let's go. It's real simple, right? I'm just gonna go back to my real estate portfolio, and what do banks do? Banks' business is what?
Lending money.
Lending money. Imagine walking into Home Depot and saying, "Hey, I want to buy a hammer." And they're like, "No, we don't sell hammers. We don't do that. That's dumb." Right? Home Depot sells hammers. Banks sell money. So if you walk in with a bank of assets, they're going to work with you, especially if it's a investment banking. In this example, I took a $700,000 cash out refi. I used it to pay back all of my policy loans. I technically could have taken more. They'll lend up to 80% of the value of the portfolio. So would someone take 4.25 and divide it by 0.8? 800. So I technically could have taken 800,000 out. Now I take my 1.9 million debt and I raise it to 2.6 million. I take $700,000 cash out refi. Has anyone done a cash out refi in the past on a property?
I have, yeah.
Is it one of the funnest things ever? Like, does it feel a little bit weird that a bank just sends you a bunch of cash all at once? Like, I remember the first time I did it, I'm like, I don't know if this feels dirty or if this feels good, but I kind of like it. So, I mean, they just send you, like, the first property that I bought, it was cash flowing a couple $100 a month. I still own that property. And I remember the first time I did a cash out refi, it was $47,000. And it was like the equivalent of 17 years worth of cash flow all at once. I still own the asset. It's still appreciating. I get all of that cash and I just put it in the vault. So in this example, I'm going to use it to pay off my policy loans. Now, here's the crazy part. Now, because my policy continued to grow over those 5 years, I have $825,000 in cash value. Now, if I want to divide that by 5 years, I can increase my income from 120. I can increase it by 37%. And now I can take 165 out every single year, tax-free, and just run the whole cycle all over again.
So you borrow from your life insurance, refinance from your rentals because the value goes up and the rents go up. And you can just do that in perpetuity forever. And then when you die, your kids still inherit a bunch of equity.
They inherit a bunch of equity. And what happens when I die on step up in basis? No taxes.
Up to like 13 million a kid.
Yes. And I have insurance with death benefit that will also pay out to cover any estate taxes. All of it works within the tax system.
So yeah, you get the life insurance policy.
Okay.
The cash out refi, that's non-taxable, right?
Non-taxable.
And you can go to
Most people don't.
70%.
No, most people don't know that. Okay. Say it one more time.
The
Because it's
cash,
debt. Cash out refi is what?
yeah, so it's
Non-taxable.
non-taxable.
And then the cheat code is you've never
So
paid
then-
on because your kids can inherit up to 13 million kids.
Up to 13 million kid. And the cheat code is if you do be Warren Buffett's or Jeff Bezos or whatever and have more than that, you can build a whole nother system to avoid all of those taxes.
Yeah. But then your life insurance will probably pay out.
You'll pay all of it.
Yes.
Does a cash out refi increase your mortgage payment each month?
Yes. Now,
Sorry.
you're good. Let's talk about that. Is it okay that I increase my mortgage payment on real estate that I own? Why? What's been
Because someone
happening?
else is paying for it.
Someone else is paying for it.
And inflation's going up.
I've been raising my rents. All the cash flow I need is I need the cash flow to keep me in the game of owning real estate. So I'm not trying to generate financial freedom off of the cash flow. I'm trying to keep me in the game of owning assets for a long enough period of time because 80% of my wealth comes from what? amortization and appreciation, equity. Right, that's the game. Now, I'm going to answer all the questions you have. I'm going to skip this. This is a real case study. These are the McDonald's in our community. This is their story. It's a phenomenal story. I won't belabor you with that. I'm just going to finish this off by telling you my story. I'm very grateful for this guy right here. This is 30-year-old Ryan, okay? Young, handsome, eyes, full of the world. But man, this is the guy that was sitting in the hospital. This is a couple weeks after I brought my son home from the hospital. And this is a guy who didn't know what to do, but he knew he needed to do something different. This guy right here, this is 4 years ago. It's 2026, 5 years ago. And really interesting, over the last decade that I've been building this system for myself and for my family, my wife, tremendously supportive. She was the one on the other end of the phone that said I quit. And then people started asking me, hey, can you show me how to do it? And built a business around this. And it's been fun, but it's been like the wildest ride of my entire life. It's been highs and lows, right? It's been crazy to work with so many people and have team members and all the things that come with that. And she stood by me through all of this, okay? And a couple of years ago, now this is one more piece of advice. First piece of advice I gave you, don't buy anything from someone that calls themselves the daddy.
Yeah.
This is the second piece of real advice that I'm going to give you, and take this to heart, especially the men. My wife came to me and she's like, Ryan, I've supported you in all your dreams. I'm so proud of you, honey. You've done amazing things. I'm proud of you. Will you support me in my dreams? What do you think I said? Like, heck yeah, I got you. What are your dreams? I'm an 80s. She's been telling me her dreams for years. Her dreams aren't my dreams. And so I didn't internalize those dreams. And when she came to me and she said, will you support me in my dreams? I'm like, I got it for sure. But what are your dreams? When she sat down and told me what her dreams were, she wanted to build a house. In fact, every house that we've ever lived in, she's turned a house into a home. She's phenomenal at what she does. She's phenomenal. She wanted to build a house. And I thought, okay, cool. That's awesome. And we sat down and started doing the numbers, and I realized, oh, your dreams are more expensive than my dreams. I didn't know how I was going to pay for this house, right? Because we've been financially free for a while. And I was like, man, this might push us a little bit, right? It might push us a little bit. And I went back for the first time and I started thinking about my portfolio as a source of income versus a way to buy my next property, right? So this is the very first house I bought. This guy right here. This is in Utah. This is in the Sandy area, White City water area. Still on this house. I bought it in 2010 for $159,000. Rented at the time about $1,250. It's always been relatively cash flow positive. This was back when they were selling properties for 10% down. So I bought it for about $18,000 out of pockets. I did a cash out refi in 2016 for $35,000. Use that to buy more real estate, right? I didn't even think about it. That helps me buy the next property. In 2021, when I went back to figure this out, the property was valued at $533, right? I did a cash out refi of $167,000. It was equivalent to about 40 years of cash flow. And I remember when the guy brought me the check. Okay, this dude was probably in his late 60s. And we were doing a mobile notary. He brought did the mobile notary, signed for it, and he brought me the check. He's like, I've never seen a check that big before. And that guy is probably the guy that had been following all the traditional financial advice, still working in his 60s. And he said, how did you do it? And I pulled up online that house, and he's like, that house did this? Are you kidding me? $167,000.
And you still have it.
And I still have it. I refinanced an LLC where I have 5 properties, and I pulled $772,000 out of those 5 properties. I put everything into a vault. Now I have 17 vaults, but I put everything into a vault system. Did I put this on here? That vault system, it started off small. There's $2.7 million as of 4 years ago. Why? It's a reservoir. This is money that was going to flow in and out of my life. And all I've been doing over these last 15, 16, 17 years is every dollar that comes into my life, I try to figure out how do I get it to stay in my life. Anytime I do a cash out refi, anytime I do anything, I try to put it into this reservoir.
Hold on, before you go on, people say, but you're gonna leave all these houses and debts to your kids. What if the renters back out or whatever? He also has 7.179 of death benefit they're gonna get.
Yeah.
Tax free.
And here's the crazy part. That will equal that. Yep. Like those two equal out. So I know that this is going to equal that over a long enough period of time.
The one I have is going to be like 3 million or whatever if we don't,
Yeah.
Crazy.
So we did all of that. Whoops, going the wrong way. We did all of that. We built this.
Your renters paid for that.
This house was paid for 100% by the system I just explained for you. I put $1 million in to buy that property to fund the construction of it. And we built this house. Now, since you guys are all realtor people in Utah, I don't oftentimes get to share this. This has been phenomenal. Every day I walk out of this house and there's someone in front of my house. And I thought they were coming to see me. I'm like, hey, I wrote the book. Do you want me to sign it? They're like, get out of the way. I'm trying to take a picture of your house. And they people come and look at this house. She's now designing houses professionally. And what is the thing called every summer? It's Prado Homes. She's got a home in the Prado Homes this year.
Yeah.
If you guys want to go see my wife's brilliant beauty, it's down in Mapleton, her home in the Prado Homes in just a couple months. I mean, ever since like people are coming to her, will you design my home? Will you design my home? So it's been a phenomenal thing. But here's the thing I want to share with you guys. I want to share with you that money is actually a tool. That's all it is. And it's not a tool for one day. I don't believe, like I shared with you earlier, I don't really believe in the idea of retiring, of deferring your life and waiting for one day. I believe in using money as a tool to live a purpose-driven life today. And if we go back to that first definition I gave you, money's really pretty simple. I just want it to give me more options with my life and more control over my time. This book gives you all of the details, but what I just gave you today was a high-level overview of the comprehensive system of how anyone can retire in 10 years or less. That's, Emily, what I've got for your room today. Now, I'm open to answering any questions. I just shared with you a bunch of crazy stuff. What is on your mind? The most important thing is you can see yourself within the framework that I modeled. Can you guys see your financial future, your financial plan inside of what I modeled? Can each one of you see that?
I have a question for you. Mine's with Penn Mutual.
Yeah.
And you have you said more than one policy.
I do.
Do you have one on each kid or what, or your?
I do have policies on each kid. You know, here's actually the secret of what we really do. I'll be honest with you, is this. We do a game plan. Like, I don't know what you should have. I don't know in what order you should have. I don't know how many properties, how many policies, until we do a game plan. And all we do in a game plan is we just start with the end in mind. What are we trying to accomplish in what time frame? Then it becomes super, super easy to come back to where you're at today, determine the resources that you have. Everything we're doing is math. Right? Then with the starting point and the ending point, then I can tell you, hey, you need to have this many properties, you need to have this much in cash value. And the goal, we didn't talk too much about the type of real estate. I don't manage any of my properties. Everything I do is turnkey. So I want to be the CEO over a portfolio. I want to own the asset, but I want someone else to find the property, rehab the property, and renovate the property. However I'm making my money, if I'm a professional realtor, I want to make my money actively, and then I want to put it into a system that gives me tax advantages, leverage, and cash flow. And I want to own my time. Financial freedom is a function of cash flow greater than expenses and time owned. If I have to do the real estate, I just have another job. That makes sense? Yeah, so I don't know. Penn Mutual's awesome. That was the policy.
Yeah. And with my policy, it took, their recommendation was to not start pulling money out of it for a few years. Do you recommend that or no?
Why did they recommend it to you?
So they can make money on your money.
Okay. Yeah.
I mean, you should have 70 to 93% of whatever you put in year one immediately available to you in cash value, and you should be taking a policy loan immediately after you sign up for the policy.
Okay.
I mean, not immediately, but as soon as we have a viable option of what we need to do with it. But that's everyone in our community.
That's what they do.
That's the focus. Minimum death benefit in the most cost-effective way, immediate access to cash value, and a strategy.
Okay.
So my husband works for the railroad and he's a director, so he gets, stocks, that's like his bonus. And then when they fund, we would take all of that, instead of leaving our money in stocks, we would take it and put it in the life insurance. Is that? And then everything we make, do you put in there too? Like,
I wish we could do all of that. I mean, the hardest part about that is, with this system, we want it to be in a system that we can have it compounding, but we don't want to use it for like our day-to-day groceries. That's just too much stuff, right? That's too many inflows and outflows. Although we treat it kind of like a bank, it's not as simple as a bank. So my recommendation is anything that is big enough, right, that it would make sense for it to compound, and anything that's is repeatable enough. Like for me, one of the things that we did is we like to travel. And so we have what we call a fund funds. And so all of the money that we would have spent on traveling, saving up for traveling, and then, spending it and doing it again next year, we put it in a policy. Now we're just recycling that money over and over and over again for every trip that we take every single year. So things like that, like if it's something that I repeat over and over and over, I can use that type of system, but not like daily, weekly type of grocery type of.
Somebody asked online, Ashton, will this PowerPoint be shared at all? This was awesome.
Okay, thank you for sure. Yeah, I can give that to Emily or
Okay,
Abby.
perfect.
And then Emily said that these are pretty easy to get, these policies. What if you have like a serious illness or something like that?
Great question. So inside of our community, what we do is everyone has a game plan, right? Everyone has a game plan, and then we work with 5 different insurance companies, all mutual companies. They know exactly what we're doing and why we're doing it, how we do it. And if there's a way, I promise you we can get you a policy. Now, sometimes you're uninsurable. And if we can't get you a policy, we've been able to get, spouses policies, kids, parents, business partners. There's lots of ways to do it. Ideally, if it's you that we're trying to get a policy on, the idea would be the policy's on you. But if we can't do it, there's still a way forward. And if we can't do it, we can work with our carriers to figure out the best, most optimal way to do it.
Yeah, I'm uninsurable. I've had 5 heart surgeries. I was your kid in that thing. Since birth I've had heart surgeries, but so I was uninsurable. We insured my wife. I own the policy, even though it's on my wife. I can also, that's one thing I had to change I thought, oh, if the policy's on my son owns the policy. No, I own the policy for my son, for my wife.
That's what Walmart does.
Yeah, Walmart does that with every employee. Yeah. Every
They
single
got
employee.
photos showing them doing that. They weren't telling their employees they were buying policies on every single employee.
Oh, wow.
That was good fun.
Yeah,
Tell
yeah,
someone if you buy a policy.
Gotta tell me.
yeah. Yeah, if Walmart does it for every single employee, it's usually a pretty smart idea.
If Walmart's doing it, our politicians are doing it. There was anyone football fans?
Yeah.
Okay, remember when Jim Harbaugh left the NFL and he went to coach the University of Michigan? There was this big, it kind of took the internet by storm. He had $14 million of his compensation routed towards life insurance. And everyone's like, what the heck is this guy doing? Right? But Jim Harbaugh did an interview and he's like, I don't like paying taxes. This is the way I don't pay taxes. So he had $14 million it was like $28 million of compensation he got from the University of Michigan, but it was all routed to premiums to a life insurance policy.
He must have several life insurance policies.
One.
He was able to do it. Awesome. Wow.
Do you have your kids in these life insurance policies as well?
I do. One of the funnest parts about this, I really do believe money is a tool for education. And I think one of the reasons that the wealthy they're afraid of leaving money to their kids, the real asset in any life is the person, right? When an insurance company is insuring you, they're insuring the asset. The asset is you. Think about auto insurance. They're insuring the car. And life insurance, they're insuring you, the asset. And so the reason I come back to this with kids, most parents don't train and educate their kids on money, right? And so they're worried that if I give my kids money without the lack of education of how I got it, what to do with it, it's going to destroy their life. And they're probably right. But one of my favorite things is we've built like a family, like our objective with this idea of being an empire builder. We've built a family office. We've built a family crest, a family set of values, a trust. And when we go on family vacations, we talk about this, like, hey, this is where the money came from. This is what we're using it for inside of our family. And one of my greatest, my daughter hates this. She's 18. I love to tease my daughter. And I'm like, hey, you have access to everything, but you get nothing. You have access to everything, but you get nothing. Inside of our family estate, our family trust, she can access all of the capital. And my expectation is she accesses and uses it to expand the family trust, but she gets nothing. Now, that's a little bit of a bold statement just to kind of wake an 18-year-old up. We'll give her a few things. We do give her a few things, but outside of that, the goal is I want to train my kids to be stewards over money, and I want them to perpetuate the family wealth. I mean, think about the Rockefellers. The Rockefellers have perpetuated money for 7 generations because of the family culture that they have that they perpetuated within.
And guess what? They have life insurance.
It's all life.
What would the Rockefellers do? Read that book.
Yeah, 100%.
So how do we learn more? How do we get involved?
Well, if you guys are interested, that's why I brought this man right back here. Everything that we do, it's a game plan. That's Dan. Dan, you want to come up here real quick?
Dan the man.
Dan the man. Now, when you get to know this guy, his story is phenomenal. We were just having a very heartfelt conversation on the way up here of how life gives you not always what we want, but it's always what we need, right?
Yep.
So for us, and this kind of, I'm not gonna say this in a bad way, but it kind of taints the way we do financial planning, because everything for us starts with a financial plan grounded on a vault. We really actually kind of want you to like us before you ever do any business with us, because the vault is how long again does that policy last? whole life. It's a whole life policy. So
Right.
if you come and sit down with Dan or Jackson or Eric or anyone on our team, you're like, oh my gosh, these guys are crazy. It's probably better that we don't enter a lifelong relationship with each other. But if you guys sit down with us, yeah, it's a marriage, right? It's a marriage. So we take it very serious, right? It does taint the way we do business with people. We try to help people do the thing that's most appropriate and beneficial for them today. So we can look them in the eyes 10 years later and we're both happy to see each other. We're both like, hey, we did the right thing for you and look at what's been possible. At this last event that you guys were at, it was so fun. You know, I had two people, because man, the internet's a weird thing, right? I had two people that showed up in our community. They've had a policy with me for 12 years now. I have never actually seen their faces, right? Because I turned my Zoom camera on and they would never turn their camera on. And they showed up. I'm like, Steven Events? Oh my gosh, look at you. And they've been in our community for 12 years. It's been so fun. But long story short, we do game plans. And a game plan, my favorite part about this is it allows us to kind of pretend like you make us king for a day. And we just say, hey, as king for a day, you tell us where your money's at. Tell us what your goals are, what you're trying to accomplish. And as king for a day, we just sit down and we map out this for you and say, look, if you made me king for a day, I take this money, I put it here. I take this money, I put it here. I take this money, I put it here. And I do this, 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 and this. And here's what that looks like. That way you can see your future inside of this system. And Dan is phenomenal at that. You want to talk any more about game plans and how we do that?
Yeah, great to be here. Exciting to see people that are in real estate already. I told people I was a real estate investor for 2.5 years before I owned my first property. So, you know, manifestation.
Yeah.
So, but the game plan, it's a little bit different than people typically think about. They think financial planner, they think strategy and that. What we're really doing is taking everything in your life when it comes to money and saying, are we positioned correctly? I always get questions about, you know, should I draw out my 401k? Should I do this? Should I do all these other things? All of that comes within the game plan. We spend hours on every person's individual situation, making sure that the advice and the structure, it's all about protection first, so that we have that control lever and we take very, very little risk. So if we feel like it's risky to you, what we're doing is we're using life insurance that people normally associate with death benefit. If a vault is in your future, we're using it for living benefit. We want it to benefit you now as quickly as possible. And so the game plan, that's where it is. Usually people come at me like on Facebook and they're like, I've got $150,000. I want to start a vault. And I'm like, that's not where we start. I don't care if you have money or not. We want to look at a game plan and a strategy that's outcome based. So we take a 10-year time frame and we work our way backwards based on the outcome that you're looking for. And that's different for everybody. We're going to give you the strike calculator, but you need to find out, like, your strike number is your very basics. That's like, if I just wanted to fire my job and just live this, you know, basic life living, bills are paid, what does that look like for you? Independence is, what do you actually want to live right now? If you were to replace your entire income, what does that look like? What are you actually spending for all those things? And then we look at freedom. And that number of freedom continues to expand over time. It's expanded for me multiple times in my life. And that's what's really cool, is when you have a system, you have a foundation and you've protected, you can then dream bigger as time goes on. He showed you 14 properties. What about owning 50 or 200? When you understand the system, it allows you to actually go get exactly what you want, protect it from inflation, and continue the growth. Not what my parents did and what most of the people that I come across do, which is they retire and lower their standard of living drastically. That's what everybody's doing around you.
And they live in fear.
They live in fear. They live that they're going to live too long or too short. They say no. They say they can't afford it. And we don't want to do that, but we're very, very careful. We care about people in this game plan, this process. And so that's really what it comes down to, is making sure that we have alignment and that the knowledge is coming along with the principles in the system. And so we want people that want to be in our community, that want to associate. We had an awesome conversation, you know, on Saturday together, and like, we want people that want to be involved in our community. It's not for everyone, and that's okay. Totally fine. But we
Yeah,
want
you're
people
not
that
gonna
want to
try
be
and push
involved.
people into it. It's more of like, are we in alignment?
That's
And
it right there.
Is this gonna be a
Yeah.
benefit for you? That's how I do all my.
100%.
Totally. It
And
makes
you
sense.
don't have to bring 3 friends that bring 3 friends
Yeah.
that bring 3 friends.
Like,
But
if
it's
you
not
pick the name of the 3 people. that
If
we
you
can
do
set,
have 3
yeah.
friends, here's the thing:
Yeah.
friends don't let friends retire broke. So
Yeah, sure.
I'll tell you one last thing, and then we can wrap it up if you like, or we can go as long as you want. Thank you, Dan. So I really believe that everything for us, for me specifically, and really for our community, we all filter it through the tax lens, right? Taxes. It's really fascinating. You know, if we look at the tax code, how many of you feel intimidated, maybe even a little bit of afraid of the tax code,
Oh.
right?
80,000 pages?
Yeah, there's a lot,
Yeah.
right?
Yeah.
I mean, you want to know the funny thing about the tax code? You know, the very first statement essentially in the tax code is everything you make is taxable, right? If that's the first statement in the tax code, what are the 80,000 pages for? Right?
Yeah.
And you know, most financial planners, they stop at like the first 5 or 10 pages, which is have kids, buy a house, put money in a 401k, charitable contributions. That's it, right? Our first objective, especially, are most people in here 1099?
Yeah.
Okay, especially with you guys, man, this is so fun. So fun. Our first objective is to lower the taxes that you're paying on your active income. And we can structurally and strategically do that very simply. Like if we just go beyond the first few pages of the tax code and go into the 80,000 that's behind it. So our first objective is lower your taxes on your active income. Pay taxes one time at the lowest possible tax rate. And then what would your life look like if you never pay taxes again? Right? That's the game. So inside of our game plan, especially if you're 1099, we'll start with the tax strategy. Then we'll take that tax strategy and take it from your active income to your passive income. Then we'll look at where your assets are currently, give you some recommendations of how, you know, if you made us king for a day, how we would restructure it. And then everything inside of our community, it's not just rah, rah, high five, go figure it out. Literally everything you need, we bring to you to be financially free. So we bring the assets, we bring the investments, we bring the coaching, we bring the tax strategy, we bring the vault, we bring everything that you need step by step. So when you need it, it's there and ready to go. And here's the best part too. And it's the worst and the best, but it makes me free, right? Because um the objective is you never have to trust me, right? Because if I stand up and say, hey, you should do this, you can go talk to Mike and Emily and be like, hey, like, is this the thing, right? And we have a community of thousands of people that are doing this. The community is the most powerful part about it, right? And when you have a question, I guarantee you there's someone else that's already gone through it. There's someone else that's validating it, verifying it, vetting it, and you can just kind of model off of what they're doing. So we don't ever do anything. I mean, your game plan's built for you. It's built in isolation for you. We don't publicly share that. But then when you're ready to execute your game plan, I mean, everything, you can lean on the community for everything.
Hey, Ryan, one bonus with this group, that's a huge hurdle for a lot of people. It's a good percentage of them are real estate professionals.
Oh my gosh. How many of you pay taxes in 2025? Any taxes? Ah. Okay.
Raise your hand.
Can we make 2000?
Employees over.
Oh man. You're W-2?
Yes.
Okay, there are things we can do with you.
Yeah.
Okay, there are things we can do with you. But if you're 1099 and you pay taxes last year, like just raise your hand and say, I commit, I'm not paying taxes this year. If you're a real estate professional, you should like legally and ethically, that's what the 80,000 pages are there for. And that's what will help you do. If you don't pay taxes, your financial freedom, like your target is so much closer if you just know how to be tax efficient. And we'll help the W-2s out too. That's where I started.
I need help.
Well, I know.
So what does it cost?
Oh man, it's a lot. It's a lot. Here's what I'm gonna say. It's a game plan. A game plan will sit down. The cost of our program is super simple. If you're in a position where you can invest and it does make sense for you to start investing right now, it's a one-time cost of $5,000 for us to build your game plan. We'll set up your taxes, your entities, your structure. We'll set everything up for you. And then it's $397 a month after that until you hit a couple of milestones, and then we drop it down to $97 a month. So we treat it just like an investment. If you're not making money back 10x what you're paying, don't pay us, right? So there's no commitments, there's no contracts. It's one-time expense. You keep your money. We run a business to help facilitate the money that you have to achieve financial freedom. There's no hidden fees or contracts or anything like that. Super, super simple. If you're not ready for that level of investing yet, like if you just don't have the resources, we have a program where we help you build the foundation first. It's $500. That's it. We'll help you get out of debt. We'll help you structure your vault. We'll help you budget more effectively to where you can build the habit of saving at least 10% of what you're making. and get ready to invest and then move into our program where we help you do that. And I'll just tell you from my personal experience, like when I read all these books and I started getting into the world of investing and all of this stuff, I was kind of blown away. And Mike, I think you've been in these worlds too. You know, you go to these conferences and, you know, you got these guys selling you $25,000 packages, $50,000 packages. I've seen them as big as 150, and I've paid $150,000 for a package. And I'm not going to say it was wrong, but like, I'll take you back to where we started. My goal is to help you achieve an outcome over 10 years. And I promise you, if you're paying that much money for a program, you won't stay in it for 10 years. And our goal is to help you keep your money so you can invest your money and achieve an outcome. And that's our grade. That's really built into everything that we do, is how do we achieve a whole life relationship with you.
I gotta say something on that. I invested $7,500 into a mastermind and doubled my income. Then I did 25,000, increased my income. 1 year I did 48,000, increased my income. Then I felt like at some point it was just regurgitating the same information I had learned. So I quit paying for masterminds, but I haven't had like this walk me through financial freedom. It's more been how to earn more, how to scale, how to leverage, how to grow your business, how to think different.
Totally.
It's a lot of times just a change in mindset. So all of the investment has been worth it, except one was total bullshit. But other than that, it was just like writing $10,000 on fire. But other than that, everything else was good. So I didn't even hear what your prices were, but investing in yourself is the best investment.
Yeah. Just give your credit card to him.
Yeah, exactly. Okay, a lot less than that. But think about this. I'm not trying to sell anyone. When I changed my mindset to, I wasn't going to do it, and someone said, "Why won't you invest in yourself? You'll go spend money on a car or this or that, but you don't believe in yourself." I was like, "Oh, shit. Okay." And then I thought, I'll try it one time.
Yeah.
I'll just try it one time. If it's BS, I'm not going to do it anymore, and then it improved my life. So
I agree 100%. I mean, I've, like you, I've invested a lot of money in masterminds and coaching and communities. And I don't think you ever, it's hard to gauge if something's good or bad until you've experienced both sides of the equation, right? And I've experienced phenomenal masterminds, and I would gladly pay it over and over and over again. And I've experienced some that are like, oh my gosh, that's the price of learning, that's not the direction I want to go. So yeah, I really believe part of the ownership economy is taking complete ownership over the choices that we make and realizing that everything is leading us forward. But that doesn't mean everything's putting a positive number in our bank account. It's teaching us lessons. And sometimes, I mean, I feel like I have to learn every lesson the hard way, unfortunately, right? I have to learn it the hard way. I'm like, oh my gosh, don't be stupid. Don't do that again.
Well, the other thing I'll say is there's people who did those same masterminds with me that didn't get the value because they didn't take any of the steps. They didn't take it to heart. They didn't try and change. Then that is a waste of money.
100%.
That's one thing about this business. There is a lot of shiny stuff out there.
Yeah.
And so you gotta kind of pencil your way through a little bit, but
I think one of the greatest things that we try to do with our community is keep them away from the shiny stuff, right? The distractions. Now, there's a place for some of that, but if we can just get you to a baseline of financial freedom, then you can speculate all you want, right? If you want to speculate on the price of Bitcoin or Ethereum or a new startup business, awesome. Do that after you're free, right? And so that is like extreme focus is what's going to get this outcome. And I think Warren Buffett also said it really, really well, right? I mean, think about this in a profession, right? I can't be an extremely good surgeon and an architect. I can be one or the other. And Warren Buffett, what he said is diversification is protection against ignorance. And if you're not in control of your money and you're handing off your money to someone else, you have to diversify. That's the price of the game. But if you're willing to take control of your money and raise your financial intelligence, focus is the key. And so what I just walked you through today, it's not a diversified strategy. And that's hard for people to take into consideration as you're good. All of my money is going to be focused rather than diversified. Yeah, it is. We're going to focus you.
Do you keep any of your money in stocks at this point?
Man, I am proud to say I own zero stock. Zero. I don't care what the stock market is doing. Like it sucks for people that are in my family and people I'm associated with. I watch them live on that roller coaster. Zero. I've had zero money in stocks for the better part of, I mean, ever since 2009-ish when I rebalanced everything. Yeah.
Hey, Ryan, I did want to mention, so I was trying to figure out when I started with you. I think it's been 5 or 6 years.
Yeah.
And, I did the initial part and my kind of go-to thing was like, if I can save $5,000 in taxes, then that'll cover it and it's worth a shot. And, that's kind of where I started. And, you know, I've been in it ever since and, you know, paid the monthly fee ever since. And, you know, obviously I've understood rentals and real estate and now, you know, the life insurance stuff. But I keep paying and keep being part of it because of the group. And then also there's always room to grow. Like even once you have your number or you want to hit or whatever, like we're at the point now where we want to focus on like legacy stuff. So we can just leave the, you know, our initial game plan goal, just let that be and kind of go to the next level to where we can create a different retirement and you know, kind of let that be and set it up with the, you know, the family trust and you know,
Have generational wealth.
have generational wealth, yeah, and that's what we're able to focus on now. And so it didn't just, for me, I guess I wanted to point out, just didn't stop like once I hit my 10 properties or whatever, you know, my initial goal was.
Yeah.
But
I'll tell you,
have like 35 or 37 now or something like that.
yeah,
but here's a couple of other things. We didn't even talk about them today. I mean, inside of our program, we have, like, we set up our own private pensions. So that's part of your game plan right now is how do we convert some of your assets into consistent, predictable asset-backed income that pays you for the rest of your life. And so everything that's built inside of our community is because we're working with real people who need real income and are progressing on a timeline of continuous financial freedom. I really do believe one of the biggest lies I think we're sold in the game of money is it's a destination, right? Trade 30, 40 years of your life, get to this magical age of 65 or 70, and then you'll buy your life back. I believe the exact opposite. And it took me a while to reframe my mind around this, but financial freedom is a lifestyle. And if it's a lifestyle, I want to be perpetually free. And if I want to come back to the game and my wife's like, hey, let's build a house, I come back to my financial plan and say, how do we rearrange our assets to do that? Like, how do we live perpetually financially free? And I think that's probably the biggest fun part about the culture inside of our community is it's just as much about being free as it is about investing. It's about blending those two worlds together.
I love that. And I can just end unless anyone has questions, but we talk a lot about, and Lewis always talks about proximity is power. And I think that's like the biggest thing with the community is it's just, you know, you're in those rooms that you're with the people that think bigger and help you grow.
That changes your mind.
Yeah.
So I just wanted to clarify, so this is something as simple, I shouldn't say, I am saying simple, it's we can come to your community, join your community, and you'll run this program, you'll tell me when it's time to start doing this, that, or the, you'll run this whole thing and we just simply approve as we go, kind of, I don't need to be so simple.
Yeah, I mean, I'll reframe it in one simple step, you'll run it. Now, we'll bring everything that you need to the table to scale it, but you'll own everything.
Sure.
But they're not going to tell you which house to buy or what.
They'll
You'll probably have
houses
resources.
to buy. You have to go
Sure,
through
you
the
have
legwork of
options,
buying the house,
so like,
getting the
you're
loan.
running it, you'll help us with these policies, oh, you should get a second or a third or a fifth.
Totally.
or
Your
whatever.
game plan will be built on a set of targets, and
Okay.
every move that you make will track your progress towards these targets. The game plan is going to tell us what to do, and then we'll course correct your game plan based on life circumstances, timeframes if they accelerate or they extend. But your game plan is based on targets, and those targets will focus on what do we need to do for taxes, what do we need to do for investments, and how do we celebrate along the way. Yeah.
So once you hit a target, you redo a game plan and set the next target. At least that's what
That's the game.
Yeah, and I'm sure these guys will hang out for a minute.
Yeah,
You guys
we'll hang out
have
as long as you want.
questions or whatever.
And
But
I brought books for everyone. If you didn't get a book, make sure you get a book. It'd be a privilege to give it to you.
grab a book.
And for our online people, should I drop a QR code for them?
Yeah.
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 If you can do that, that'd be great.
Sean's brought in someone that brought us lunch. We also have some sandwiches, so he was gonna give him a minute to talk about some solar options that we
Great.
have for there'll be food.
I don't know if I can follow that.
Yeah, how are you gonna make us money?
No. So, Chase is Solarmatics, and I've been in the solar industry for about a decade. Who here likes solar and you're in real estate? You do?
I have solar.
You have solar personally? What happens when you run into?
You raised your hand like this. Oh.
Yeah. So when you run into it at work, it's a pain in the ass, right?
When what?
In real estate, no realtors love solar, right?
It's harder to sell.
Oh, it is. There's all the problems that all the shitty solar salesmen have created in the wake of distraction that they've left in their past. So what I've tried to do, so I have like 3 pillars of my business. One is service and maintenance. I fix abandoned systems. 2, I partner with roofing companies to do like detach and resets. And then real estate's the third. And that's a hard one because I kind of have to create the whole surface. So right now, when you list a house or when you buy a house with solar on it, you find a house for one of your clients, the seller says, yeah, it works, and that's about what you got, right? The home inspectors exclude it. And there's no information, you gotta get the lien removed. Sometimes you have to try to get a whole brand new loan transferred over. Sometimes the banks don't do that. There's a lot of problems that come up with solar, so I can't fix all of your problems, but I can help. So I do a solar inspection for listings. I'll make sure your property has a working functional solar system on it. I do a report where I'll say, hey, it's gonna generate this much per month. It's working. Here's your warranties. Here's how you transfer over to monitoring. I kind of help hand off the solar system from the seller to the buyer. On the buyer's side, you want to make sure that if you're gonna try to get some extra home value out of your system, you want to make sure it's working because they're gonna be paying a little more for it. So I'll do a system diagnostic. I'll do service on it. I'll get things up and running. I do a lot of other stuff, and I don't have enough time to sit and go through everything. So, um, just next time you run into a problem with solar, call me. I promise I can help. I have appraisers who are great at educating other appraisers on how to value solar systems. There's a lot that I can do to help. So, anyways, I've known Sean and Lewis forever. There's Chick-fil-A out there, help yourselves. There's Pops and stuff, and Chase.
Thanks for Chase. He knows his stuff.
You've been doing it really.
He's not gonna try to upsell you on buying batteries and all this other BS. He's just there to help. So if you come to a solar issue, I promise they'll be worth it.
Yep.
And I'm gonna put your phone number in here and email.
Awesome.
And website. So
Thanks, guys. Sorry, no, great.
yeah, that's it. Thanks, guys. If anyone else is interested in coming back to this mastermind, you're welcome. It's on Wednesdays. Just let me know and I can send you the link to where you can join and then know what calendar events. So thanks. No, let me stop this real quick. And I forget I'm not in charge. This guy's in charge, so.